All right, let's just get right into it. The crypto market is a sea of red. Prices are tanking, billions are pouring out of ETFs, and you can almost feel the fear in the air. But what if I told you that underneath all that panic, the actual fundamental case for Bitcoin is getting stronger than ever? So, what's the real story here? Is this just a passing storm, or is the whole foundation starting to crack? Let's break it down. Okay, so first things first, let's look this fear right in the eye. Before we can even talk about the long-term picture, we've got to understand the short-term panic that's absolutely dominating the headlines. And the numbers? Well, they paint a pretty brutal picture. After hitting that incredible all-time high, Bitcoin has just plunged more than 30%. Now, a correction that sharp doesn't just make people nervous. It literally fuels this whole narrative of panic, right? It takes over the news cycles and really starts to shake investor confidence. And it's not just about the price either. A staggering $2.5 billion has been pulled out of the spot Bitcoin ETFs. The very products that were supposed to be for these big institutional investors. When that kind of money starts heading for the exits, it sends this huge negative ripple effect straight through the entire market. And then you've got veteran analysts like Peter Brandt pouring gasoline on the fire. His prediction that the price could drop all the way to 58K, that adds a really credible bearish voice to all the noise, and it makes this storm feel incredibly real for a lot of people. So with all this negative data piling up, you have to ask the big question, right? Is the bull run over? Is this it? Or is all of this chaos on the surface actually hiding a much deeper, much more powerful trend underneath? Because, even in the middle of this storm, a really strong counter-argument is starting to emerge. And this argument says that Bitcoin's fundamental value isn't just surviving this crazy volatility, it's actually being tested and made stronger because of it. So let's dive into that. And look, this counter-argument is coming from some very serious players. We've got Chris Cooper from Fidelity Digital Assets suggesting that we're not at the end at all. In fact, he thinks we might be entering what he calls the acceleration phase of the bull market. And that's a phase that's often really volatile, right before the next massive move up. Now, this isn't just wishful thinking. It's a structured argument. The entire long-term bullish case for Bitcoin is built on three foundational pillars, and each one of these represents a huge shift in how the world is starting to see and use this asset. So let's break down these three pillars, the very things that are working together to build Bitcoin into something much, much bigger than just a speculative asset. First up, pillar number one, institutional adoption. This is all about Bitcoin's evolution from, this niche, retail-driven thing into a legitimate strategic asset that's showing up on the balance sheets of major corporations. And the speed of this shift is it's incredible. The number of public companies holding Bitcoin as a treasury asset, we're talking a core part of their corporate savings, has exploded from just 1 to now over 75. What started as this super bold move by Michael Saylor at MicroStrategy, well, now it's becoming a legitimate corporate finance strategy. Okay, pillar number two is something that used to scare a lot of people, regulation. But the argument here has completely flipped. Regulation isn't the enemy. Actually, it's a sign that this entire asset class is growing up and gaining real legitimacy. And this statement from the new SEC leadership, it signals a massive shift. When they say a clear rulebook is a key priority, that's a huge step away from what people called regulation by enforcement. Where companies basically had to get sued to figure out the rules. Now we're moving towards a stable, predictable framework. And for big institutions that need that clarity, this is an absolute game changer. All right, the third and final pillar takes things to a whole new level. We're not just talking about companies anymore. Now we're talking about entire nations starting to weave Bitcoin and other digital assets into their national economic strategies. And this isn't just some theory, it's happening right now. You've got El Salvador buying the dip, adding another $100 million worth of Bitcoin. Kyrgyzstan is innovating with a stablecoin that's backed by actual physical gold. And even in the US, there's a bill on the table to create a national strategic Bitcoin reserve. The geopolitical game is officially on. Okay, so let's circle back to the storm. We've built this really solid, long-term case with these three pillars. But how does all of that stand up against the very real fear and the sell-off that we're seeing right now? This is where the story gets really interesting. The data is showing a huge split. Those massive outflows from the ETFs, it looks like that's mostly coming from shorter-term retail investors reacting to the price drop. Meanwhile, the whales, the biggest long-term holders, they're not selling. In fact, many of them seem to be using this dip as a chance to buy even more. And this chart reveals another really important dynamic. Money isn't just leaving crypto altogether, it's moving around. See, on the one hand, you have big outflows from the Bitcoin and Ethereum ETFs, but at the exact same time, other assets like Solana are seeing huge inflows. This isn't a mass exodus from crypto, it's a strategic reshuffling of capital within the space. So in the end, it all comes down to perspective. For a short-term trader, what's happening right now is a max pain zone. It's brutal. But for investors who are focused on those long-term pillars we talked about, well, analysts are framing this exact same situation as a great discount zone, a potential buying opportunity. So if we zoom out and filter out all the daily noise and the scary headlines, what's the big takeaway here? What's the key thing to remember from all of this? Well, there's a powerful metaphor that really ties this all together. Think of the entire crypto market as this vast, stormy ocean. In that ocean, Bitcoin is positioning itself to be the aircraft carrier. Now, the storms on the surface, the waves of fear and retail selling, they can definitely rock the boat, no question. But the ship's stability comes from what's below the surface, that deep foundation of institutional adoption, the growing regulatory clarity, and its emerging role as a strategic reserve for entire countries. That's the foundation that its believers argue is becoming, well, unsinkable. Which leaves us with one final question. As you look out at this choppy ocean, now that you know about the structure that's being built beneath the waves, what do you see? Is it a storm to run away from, or is it a wave of opportunity just waiting to be ridden?